Indians have been speculating why FIIs have been selling out of Indian markets. It's not long-term capital gain, short-term capital gain, or securities transaction tax for that matter. India has been seeing approximately $20 billion in FII outflows, with much of the capital redirecting into Chinese equities.
Is that in the last few months, India has lost $20 billion of foreign institutional, in terms of foreign institutional outflows, and a lot of that money has gone into Chinese tech and essentially Chinese equities.
This combination of low valuations plus government stimulus has created a compelling case for a reallocation.
Areas China and India can find their local champions. So we think there's opportunities in both, but arguably China has run up that in the past, maybe 6 months ago, it was very difficult to justify at some of these costs that these local champions are going to be able to keep powering through. Whilst on the other end, China has been very undervalued. From a valuation perspective, it's been really struggling. So what we're seeing at the moment, we're still seeing India being the darling of Asia. With regards to international investors, US and Europeans still prefer investing in India than they do in China. But the valuation in China and some of the stimulus starting to build green roots is making it very exciting. And we're starting to see tactical trades coming in, particularly around tech, particularly around some of the manufacturing that where we're seeing some of the index numbers coming through. So it is a mixed bag. For us, we still like both. We want local champions, but we prefer China today over India for sure. We think
market sentiment has shifted dramatically, creating momentum that's drawing institutional money away from India.
We do like the opportunity in China from a value perspective. We have almost half of our Pan-Asian portfolio in China, especially the SOEs. But we had a lot of India, and I was scolded live on this show when I shared early last year that we're taking down India from over 20% to around 7%. Yeah. This budget sort of came in as expected, but had a lot of sort of goodies, I think, for the middle class intended. And part of that, I think, is a reflection that consumer balance sheets in India are not as good as they may have been. And so that combines with a stock market dipping, that's not a good configuration, right? So, and because very often the stock market rally can create a wrong sense of wealth. And I think that's what people are responding to.
This double concern has FIIs questioning their exposure. The tax relief in the budget is actually being seen as a reflection of poor consumption.
And the Chinese government is actually supporting that. The Chinese government has, over the last 2 years, there was a circular, I think it was November 22, I hope I get the year right, but I think it was November 22 when there was a circular coming out where the government and the CSRC are basically saying the HA discount is a sign of non-well-functioning capital markets, and we are going to do something about it.
Indian tech industry doesn't have the ecosystem to produce hardware for the AI story that's playing out in the US and China. So Indian tech sector doesn't seem to be exciting FIIs.
And they also talk about how India may do well on the software front, but on the hardware front, India, again, doesn't have that ecosystem to take that story forward.
And this is how the FIIs are looking at the Indian markets now. They are looking into the niche sector, not very optimistic on the index growth story.
We're feeling that we have to dive in deep into India. We're not playing the beta trade anymore. We're not playing just try get in and ride the economical growth, this kind of darling of Asia. We're liking much more private markets. We're liking to look at fund managers that are really niche and focusing on specific sectors. It's not really about buying the Nifty as a general kind of ETF approach. Is really getting involved there. So we're spending a lot more time on the ground trying to understand where it is. You talked about trust and infrastructure and building up those opportunities. So again, it comes down to how is India going to build their resilience, get their government support. So energy, infrastructure, tech ability, these are the spaces. We're seeing a lot of banks outsource into India. So that's being a big shift. So there's a lot of those businesses that are growing. But India it's a lot harder to make the easy money. India's been a fantastic trade. If you take that chart back 10 years, it's very different. India's been fantastic. So don't get me wrong, the Indian investors have maybe taken some money off, but they're still well in the money. They are looking for an opportunity to buy. We're looking for where they're going to start buying, where they see the next. And when we talk to our big clients in India, they're looking for niche opportunities. They're looking for where we're going to see the next infrastructure deal, where we're going to see the next business, which is going to help grow India Inc. So it's a lot more tactical in India than...
And here are the two sectors or stock FIIs are liking at this moment.
We like the road infrastructure INVITs. Many of them just receive availability payments from the government. traffic is insured, therefore, essentially, or for a big part of the revenue, and they're trading at 12% IRRs. So I know it's not the best trade of the century, but it's just the wrong price. And there's a debate whether the price for the other things is right.
Yeah.
And then on sort of the more mainstream, we do like the power sector as an interesting opportunity in India. We like ONGC, a company that's adopting more and more market pricing through the products that are flowing through that company, but also are adopting more and more, and have actually, to give them credit, adopted very much sort of world-class management practices, and I think that was on display at their last investor day. We're sort of marginally increasing at the moment. I think we've increased by 100 basis points or so our India exposure.
All in all, the FIIs believe that there is a need for Indian government to show support for growth. Let me know what you have to think about this.